Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it's proving out to be a very good morning for the global markets. Overnight we saw Wall Street clock a fresh record high on the back of softer than expected US CPI print. S&P 500 shut shop above that 5,300 mark for the first time ever. You have Asian markets in fine fettle this morning, and GIFT Nifty, of course, hinting at a triple-digit up move. So 22,300 will once again be in focus on the upside where Nifty is concerned. Lots of stocks in focus. Important earnings today, M&M as well as HAL. We'll be watching out for that. Some brokerage reactions to stocks or companies that have reported numbers yesterday. We'll be taking stock of that as well. And of course, we'll also be taking stock of all your stock related queries. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up with our experts on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street hits record high as cooler than expected CPI print for the month of April raises hopes of a rate cut by the Fed as early as September. S&P 500 ends above the key 5,300 level for the first time. Asian markets follow US peers higher. Nikkei rises despite a larger than expected contraction in first quarter GDP numbers. The GIFT Nifty is hinting at a higher start for the Indian market. Precious metals rise on optimism over rate cuts after an encouraging US inflation report. Cryptocurrencies also surge on rate cut hopes, but crude prices remain range-bound at $83 a barrel after International Energy Agency cuts global demand projections. In key earnings to track today, automaker M&M is expected to report a mixed set of numbers in the fourth quarter amid weakness in tractor segment. Also watch out for numbers from InfoEdge, Biocon as well as HAL. Well, just about 11 minutes to go for the markets to open. Let's take a look at the cues then. The Nifty ended extremely flat yesterday, although it was a range-bound session. The swing high yesterday was 22,297, so that will be the resistance levels to watch out for in today's session. But 22,200 is where we shut shop yesterday. The India VIX index cooled off slightly for a second straight session, but it remains near that 19-month high and above that crucial 20 level. FNOQs, the Nifty open interest was down 4%, shed somewhere around 4.3 lakh shares. The Nifty May futures are now trading at a premium of 69.2 points vis-a-vis 90.85 points. The Nifty Bank index open interest was up 4.5%, added 1 lakh share. And if you look at the put call ratio, it has cooled off a bit to 0.92 vis-a-vis 1.02 in the previous session. Lots of stocks in the FNO ban list today. The new entrants are Biocon, Granules India, India Cements and LIC Housing Finance. In fact, the stocks that are still in FNO ban from the previous session are Balrampur Chini, Birla Soft, GMR Airports, Hindustan Copper, Vodafone Idea, Piramal Enterprises, SAIL as well as Z. But Canara Bank has managed to exit the FNO ban list for today. In the futures and options, in fact, the fund flow picture rather, FIIs have net sold stocks worth 2,800 crore rupees in the cash market. So the trend of FI exodus continues, but buying support has been seen by domestic institutions. So domestic investors have invested somewhere around 3,600 crore worth of stocks in the cash market. Let's bring on board our technical expert for today then. Vaishali Parekh, who's the Vice President Technical Research at Prabhudas Lilladher, is joining in right now. Great to have you on the show, Vaishali. What are the resistance levels you'll be watching out for today? Because yesterday it was a fairly range-bound session, but we did come very close to that 22,300 mark. So a decisive close above 22,300. Does that look on the cards? Is that possible this week?
Very good morning, Nandita, and thanks for having me on the show. So yes, 22,300, 22,350 acts as a strong hurdle. So unless and until we see a decisive move past that and sustaining above that, I would say we continue to have a range bound. But if this happens, sustaining about 22,350, we are ready for the upward trajectory of 22,600. So that's how we are looking at the markets right now.
All right. What about the Nifty Bank Index? Do you think it could, make a dash at the 20 DMA level, which happens to be above that 48,000 level? We have 3 more sessions to go, right? Today, tomorrow and Saturday as well is working this time around.
Well, I would be hopeful because Bank Nifty has quite a bit of weightage. So I would want Bank Nifty to sustain above that. So for that, we need to cross 48,000 levels and then look at higher targets. But for now, I would say 47,000 still acts as a support. And we have the supporting sectors like IT taking over since yesterday. So let's wait and watch. But yes, it has to happen for Nifty to thrive harder.
All right, hopeful that the Nifty Bank Index will be able to cross that 48,000 level. But let's talk about some stocks then that are on our radar this morning. M&M will be reporting numbers. The stock has already hit a fresh high, right? Let me just take you through the expectations. It's likely to be a mixed bag. Revenues are expected to grow 6%, but profits may drop, on the back of inferior mix. 9% drop almost on PAT side expected, and margins are likely to contract a little, 11.9% vis-a-vis 12.4% in the same quarter last year. Tractor segment likely to be under pressure, but now that the stock is at fresh highs already, would you advise taking part profits here, or would you say stay invested because higher levels are possible on the charts?
So I would say keep a trading stop loss of 2250. Either you book partial profit, because right now I'm seeing chart of all periodicities and we are in quite an overbought zone. So yes, I don't see much, maybe 2500 to be on the higher side, but either book profit or keep a stop loss of 2250.
Okay, keep a stop loss of 2250. That's the call on an M&M. But Hindustan Aeronautics, this stock has been on a tear, and of course, it will be reporting its numbers today. Sales is seen up 13.5%. That's according to ICICI Securities. Profit expected to decline over 20% on a YY basis. Of course, if you look at the stock performance in the last 2 years itself, the stock has given 5x returns, 430% returns in the last 2 years. Do you think the charts, are overbought for some of these defense names?
Yes, similar scenario. I mean, quite run up, and I would say it's prudent because market, anyways, in times to come is going to be a bit more volatile. And I would say that yes, no harm booking partial profit, because wait for a decline if one has to really re-enter.
Wait for a decline. That's the view on an HAL. Talking about Titagarh Railways, right? It reported numbers, strong numbers. Profits jumped 64% on a YY basis. Margins have also seen a bump up, and revenues are up somewhere around 8% or thereabouts. Post numbers, is there a trading opportunity here?
I would say so. Actually, these stocks like RVNL, Titagarh Rail, they all still have, because they've got into new round of momentum. So I don't see this in overbought zone. There is quite a potential of these stocks going further high. So I would say 1050 is the near-term support for Titagarh Rail. And we also have a near-term resistance coming at around 1250. So I guess that should be the range which one should observe right now. Either way, a breach would give a further clarity.
All right, that's the view on some of these railway stocks. But LIC, saw good traction yesterday on the basis of news flow. But going forward, 1000 looks a given on the charts. In fact, in the I can see the stock almost rubbing shoulders with this level. But could this be the start of a new leg of upside on this stock? What are the charts suggesting?
I would think so, because we saw a good consolidation round coming in this, and for a further confirmation. I mean, even for it is quite an attractive level to get into the stock, because I think it's made double bottom at nearly 960, 970. Currently, we are at 1000 levels. Once it moves past 1020, I think in all likelihood we can see targets of 1100 and plus coming in days to come. Yeah.
All right, shifting focus to tire stocks. They haven't really done much, on a YTD basis. They have been underperformers, so to say, in the entire auto pack. Apollo Tires came out with numbers, but they were largely disappointing. We have got some brokerage views coming in on this particular stock. Morgan Stanley has an equal weight rating, target price at 472. Morgan Stanley is pointing out that margins may have topped out for Apollo Tires, and the company is looking to take price hikes to offset cost pressures, but those price hikes could slow down the revenue momentum. Because of peak margins, Morgan Stanley would be on the sidelines. But Nomura, on the other hand, has upgraded the stock to neutral with a target price of 512. On the charts, would you also expect levels of 500 to be crossed sometime soon, and would you would you say that these levels will be sustainable?
Well, not in a hurry because there is no such clarity. First of all, the stock has, after making a high of 550 levels, it has shown a bit of correction. So only view right now is 450 being the 200-day moving average. That should act as a crucial support. And now we are seeing some pickup coming in. So if we continue seeing further momentum above 490, 495 levels, then one can say that yes, it's possible to get targets of 500 and plus. That is 520 to start with.
All right, that's the view on Apollo Tyres. But I want to get in your thoughts on Granules India. The company reported numbers yesterday. We have a query also coming in, which I thought I'll get addressed at this juncture itself. Krishna wants to know your thoughts on this stock. He's holding 200 shares at the rate of 440 rupees per share. He wants to know whether he should hold on to it or exit. What would you advise?
So I would say the long-term chart, they are still in the uptrend. So right now I would say continue holding. The view gets negated only below 380. So if we break 380 levels, then it's a cause of concern. But till then, continue holding because I think there is a range, there is a possibility of this stock going towards 420-30 levels. And above that, we can expect higher targets. Since the overall long-term trend is positive, I would maintain a positive view and buy at decline.
All right, buy on decline is the view here. Hope that answers your query. But very quickly, as we go into the market open, want to ask you what would you like to recommend to our viewers in terms of stock picks for the next couple of sessions?
So well, yesterday, as per yesterday's close, we saw good formation, reversal formation, or maybe rather too early to say, but I would say look at persistent system because IT sector has really been a laggard, not performing at all. So we are trying to cherry pick stocks from these sectors. So persistent is one of them. The other one, what I would look at is BPCL because BPCL also gave a strong close, and after a good corrective move, this is getting into momentum. So BPCL, Coal India, and persistent are to my liking for today.
All right, even upstream oil companies will be in focus as the government has slashed windfall tax on crude output to 5,700 rupees per ton from 8,400 rupees earlier. This is a sentimental positive for some of these upstream companies, right? So, between ONGC and Oil India, which is the one that you would prefer chartically? Which one is looking more attractive now?
So, I think Oil India has already participated quite a bit, and
all right, I think we have lost Vaishali's connection here. We'll try and reconnect with her, but just about a few seconds to go for the markets to open. Of course, it is likely to be a very strong start given the fact that the GIFT Nifty was hinting at a triple-digit up move on the index of 22,300. That is a crucial level we are watching out for. On the upside, 22,297, which happens to be yesterday's swing high, will be in focus. On the upside, that would be the resistance level really to watch out for on the index. Just about 10 seconds left. The broad end of the markets did well yesterday, outperformed. The mid-cap index was up somewhere around 1% or thereabouts. We'll have to see whether or not we manage to maintain that momentum and whether we see broad-based gains given the fact that global cues are extremely supportive this morning. Look at the Nifty. 22,297, as I was mentioning, that was the resistance level to watch out for. We are near about that level, 22,300, almost there on the charts. And if you look at the broader end of the markets, there's strength there as well. The Nifty Midcap index is up 0.5%. Also want to see what the BSE Smallcap index is doing. Must be higher by about 0.5% or thereabouts in tandem with the Nifty Midcap index as well. So advanced decline ratio tilted in favor of gainers, of course. It's at 6:1. So breadth is extremely positive, very strong. And if you look at some of the sectors, the Nifty Bank index is showing strength. It is above that 47,900 level as we speak. We'll have to see whether it manages to reclaim that 48,000 level. That is a crucial level to watch out for on the upside. Let's see what the Nifty Metal Pack is doing. It was among the top performing sectors in 2 out of the last 3 sessions. So the Nifty Metal Pack should come up on your screens right now. Let's see how that one is faring at the current juncture. 0.5% uptick for the Nifty Metal Pack. When it comes to the auto basket, I want to see what the auto pack is doing, given the fact that M&M will be reporting numbers. So autos will be in focus in today's session. Aside of that, let's see what the pharma pack is doing. Pharma, IT, defensives, FMCG, these are some of the sectors that should come up on your screens. 0.2% gain for the Nifty Pharma pack. So all in all, it's a fairly strong open. The IT pack is showing strength, 1% uptick there. FMCG as well, no fireworks there, but trading with a positive bias. So all in all, a very strong start for the market. 22,300 is, we are around that level as we speak. In terms of the individual movers, Bharti Airtel, that's the top Nifty mover, 1.5% gains coming in there. There were some commentary. There was some commentary coming in from the management yesterday in the con call, where they have spoken about tariff repair and going forward how a three-player market is crucial for the telecom industry. Aside of that, tech names like HCL Tech, Tech Mahindra, Wipro, Infosys, all among Nifty gainers. Hindalco, Hiromoto, M&M ahead of numbers. Adani Ports, ONGC, Tata Steel, these are some of the other movers. In terms of losers, you have the likes of Power Grid, Maruti, Cipla, Coal India, NTPC, Tata Motors, L&T and Divi's Labs. So these are some of the Nifty losers as we speak. Let's go back to Vaishali then and touch base with her. Vaishali, if you can hear me, we are almost around that 22,300 mark. Looking at the open, what are the levels you'll be watching out for in today's session in particular?
So I would say for today, I would keep 22,200 as support and 22,350 as resistance. So that would be my range.
All right. Let's talk about Tata Motors then. Recently we saw a big downtick coming in on the share prices. Today as well, it is among the losers. Would you advise taking a 2 to 3 session bet on this particular stock?
I would say, well, we have seen the previous bottom at 920. So not much of a conviction, but 920 would act as a good support, and that's the level that I would look at for buying strategy.
All right. Berger Paints is another stock, it's in focus given the fact that we saw numbers come out. We have, a brokerage call as well. Morgan Stanley is underweight on the stock with the target price of 423 or thereabouts. The stock right now is trading at somewhere around 488 levels or thereabouts. Would you take a bet here?
So I would say its only consolation is that it's in deep oversold, and we are seeing a bit of a bullish divergence. So maybe with the low of say around 475, I may consider this stock for a bounce back up to 500, 510.
Some downgrades coming in for Colgate. Target prices are range between 2,500 to 2,900. Of course, brokerages are saying that valuations are looking pretty rich here, and earnings going forward are expected to moderate. Your thoughts on where the stock is headed from here?
So I think Colgate, actually the long-term trend is also getting a bit weak. But if it goes below 2550, then I think it is getting into a corrective move. Till then, just wait and watch.
All right, wait and watch. That's the call on Colgate. Let's take up some viewer queries then. Srivardhana Gupta wants to know your thoughts on a Coal India. Coal India, of course, in the last few sessions has seen good traction, but today we are seeing some bit of profit booking on the charts. Here, what should the strategy be? Should one look at buying on dips?
I would think so, because 450, I mean, it's a very strong uptrend stock, and right now it's gone through a long consolidation. So as long as 450 levels are held on, I would say it's a buy at every decline, and look for a target of 475 to 480 in times to come.
All right, keep those levels in your mind. Hope that answers your query. The next one is coming in from K. Naga. He wants to know your thoughts on a Biocon. The company will be reporting its numbers today. Stock is down somewhere around 1% or thereabouts. He wants to know whether he should hold or sell. It seems that he already has some holdings. Should he continue to hold?
I would say so, because this stock, of course, has been a laggard, and I think it is getting into a trend. So right now, hold with a stop loss of 290, because it's just making a good trend formation, and so 290 should be the support to watch for, and above 320, 330, one can look for a target of 380 to 400. So I would say continue holding.
All right, continue to hold. That's the call on a Biocon. The next query is coming in from Maheshwar Bhanu. He wants to know your thoughts on a Root Mobile with a medium to long term perspective. In the past 1 year, the stock has not been performing, and he wants to know whether he should average at current levels. Stock has not done much over the last 5 sessions. Would you advise him to average?
I would say yes, but where a strict stop loss of 1400 should be maintained, because I'm looking at the weekly chart and I think it's just in a consolidation. So the view is that it can show a good bounce from here on, but if 1400 levels break, then one should exit, because that would call for further decline.
All right, that's the view on a Root Mobile. The next query that I spotted on our feed was on a Repco Home. Kartikeya Singh wants to know your thoughts on this. Not participating in today's up move, the stock is down 1.5%, but over the last 1 month or so, we've seen gains of somewhere around 8% or thereabouts. It's still somewhere around 40 odd rupees away from its 52-week highs. How would you approach this particular chart? Would you advise him to buy into it at current levels, or would you say that wait for some bit of a dip to come in and then get into it?
See, the support lies at 470 and it is getting in a trend. So I would say yes, keeping in mind 470 as support, I think it is still a buy, because we are in a good uptrend even now.
All right, that's the view. Hope that answers your query. The last query really for today, Viru Pakshi wants to know your thoughts on an Atul Auto. Any thoughts, any levels you'll be watching out for in particular for Atul Auto?
I'll just have a look. So Atul Auto too is just coming out of its consolidation. It's making a higher bottom formation. I would say it becomes a good buy at these levels at 530 as support, and wait for this stock to move past 615. That would give a clarity for further higher targets. So that's how I would view this stock.
All right, that's the call on Atul Auto. Hope that answers your query. But with that, Vaishali, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. We look forward to interacting with you sometime soon again.
Pleasure.
Well, with that, let me bring on board my next guest for today. Joining me, Siddarth Bhamre, who's the head of research at Asit Mehta Investment Intermediaries. Great to have you on the show, Sid. We are interacting after a very long time. Let me first ask you about what you feel about the texture of the market. We've seen extreme volatility in the run-up to elections. We've had an earnings season that really, didn't have any kind of fireworks, so to say. So here on, what could be a big disappointment? Would you say that number of 400 will be crucial as we, await the June 4 verdict? And looking at the commentaries coming in from the managements, what are your thoughts on how earnings will fare from here on?
Good morning, Nandita. Thanks for having me on your show. See, I'm not a political expert, but I think this 400 mark or 320 mark, it's a good story to talk about. But I guess even if it's not 400 and if it's like 350, 320, market might show some initial knee-jerk reaction. But as long as market believes that this government is good for economy and market at large, then even the continuity would be good for markets. That's what people are perceiving. So if there is a disappointment on those 400 front mark, then the knee-jerk reaction would come into play. And as you rightly mentioned that before such key event, volatility would spike. And obviously, if you look at the India VIX, that has also shot up in recent weeks. So this is part and parcel of the process. My personal take over here is that you may not see huge movement after the election, what people are believing, and it may be life as usual, irrespective of the fluctuation between say 320 and 400. Coming to what we should talk more about is earnings. And as you rightly mentioned, there has been no fireworks, but there has been no major disappointment as well. See, last 2 years, markets have run up significantly post-COVID. And we have seen that, and we all were worrying that will earnings catch up or not? Will earnings justify these higher levels. Well, justify may be too strong a word right now, but earnings are catching up with these higher levels of market. So if I just run down through some of the sectors, banking has been pretty fine with most of the large names showing good growth in net interest income. Though, some of the banks have shown some pressure on NIMs because of higher cost of deposits. But then we are seeing, great growth momentum, which has kept this main sector of our market quite ticking. And there has been no significant disappointment. And you can see in stock prices, barring, few hiccups in names like Kotak Bank because of unrelated reasons. We have seen dip over there, but otherwise most of the banking names have done well. IT, yes, there has been some issues related to the guidance part of it, but except TCS, but that sector is not very expensive, so you may not see a continuation of dip over there. We are seeing good traction taking place in auto names. There is mixed trend in FMCG. So overall, I believe earnings season has been supportive, and I'm not just talking about this earnings, but overall earnings since last 2-3 quarters has been supporting this upward journey which our markets are into. Also, if I have to, touch upon Nandita, some important development in US markets, and which would be prudent to discuss today, is a slight dip in inflation, though it was expected that inflation would fall to 3.4%. But the retail sales numbers of US has been disappointing for last month. And that is the reason you have seen that there is a sharp dip in the yields and also dollar index, which again is equity positive, emerging market equity positive. And even Dow Jones has closed at an all-time high again. I believe that we should not be too perturbed by these events which would come and go, and after 2-3 months we won't be discussing about that, but we will be discussing more about what's happening in budget now.
All right, you touched upon quite a few sectors, but I want to focus in on the FMCG pack in particular. You could say that it has been an outlier in terms of management commentary, right? Till now, premiumization as a theme was working well for FMCG. Now, stocks have come back to life after, the street has assessed what the managements have guided in terms of rural demand picking up. After the recent underperformance, do you think this is one pocket to look at in terms of valuations as well? Does it offer valuation comfort now, and should one play the FMCG pack in terms of rural demand recovery, given the fact that IMD has also predicted an above normal monsoon for the year?
True that. So, historically, Nandita, what we have seen that HUL used to set the trend or tone for the earnings, how FMCG would perform. But contrary to that, this quarter, what we saw that HUL earnings were in line but disappointing with, decline in profitability, decline in revenue, and margins pressure also being there. So that is what was expected from most of the other names as well. But as I mentioned, it was contrary to the historical trend that other companies came out with decent set of numbers, and more importantly, as you mentioned, the management commentary about green shoots in rural economy, did give market a reason to cheer. Having said that, I believe these green shoots in rural economy are you need to watch. If you look at the historical trend of how rural economy picks up, it's not that just the 1 quarter or 1 month numbers coming from rural economy would ensure that there is a change in trend. I would probably wait for more monthly figures coming from the economy, probably, more quarterly number, and then take up a large bet on or large contra bet on rural play. Again, on the valuation front, which was your prime question, yes, it's relatively cheap. And if we talk about the leader of the sector, Nandita, since 2016-17, HUL has not traded below 50p, and it is available now. And I always tell to my investors and our clients that either you get a valuation support or you get growth clarity. Both cannot go hand in hand. So today the growth clarity is not there, and that's the reason you are seeing that stock like HUL available at these valuations. I'm not saying that there cannot be a downside from current levels, but the valuation support now exists. And if you're a long-term investor, and I'm not talking about 1 year, but if you're thinking of investing from 2, 3 years perspective, I think it's a good stock to have exposure in.
All right. Of course, but you'll still wait for another quarter to take a contra bet on this sector, so to say, right? Coming to the infrastructure and industrial space, of course, there's been a lot of impetus in on infrastructure development, right? But we have seen a lot of these industrial and defense and railway stocks. We've seen an explosive run in some of these stocks, and valuations appear to be out of whack, but we still have a lot of brokerages still initiating coverage at this juncture. So how should one really position themselves, after the, massive run up that we've already seen? Would there be an entry point in any of these pockets?
Nandita, stocks, be it, infra space or capital goods space, just a year back where people were not ready to buy them at, low teen P, are now chasing them with P as high as 30, 40, 50. And I would refrain from doing that. But if I have to play today infrastructure space, and also where, the sanity of valuation also remains, is cement space. And that is where, we are concentrating on. Today, cement space, Nandita, we are seeing that the game has been more of volume growth. And that's the reason you name the company and they are talking about capacity expansion. There are different markets in cement. Most of the growth is coming, or the percentage growth, if you see, is coming more from eastern markets. Southern markets are a bit tepid right now. Western and central is doing pretty fine. Yes, valuations are not cheap, but then names like Ultratech, Birla Corp from midcap space, Shree Cement, these stocks are outliers in terms of, despite industry not showing much of rise in realization, these companies have shown increment in realization. Also, the entire sector is moving towards green energy, and as you would know, that fuel and power is the main component of costing in this space, and that is where I believe margin would remain stable going forward. So it has become a volume game, and this industry, though at current capacity might, these stocks on current capacity might look slightly expensive, but as the commissioning of new capacities and the production starts from them over a period of say 26, 27, I believe still valuation comfort lies in cement space. And if you want to bet on infra and also want valuation support with a decent amount of clarity in revenue growth, I think cement is the safer bet.
All right, there's still value in the cement space, but last question really said, what about the auto pack? This sector had been among the best performing sectors in FY24, and even on a YTD basis, we've seen the auto index up in excess of 20%. You talk about two-wheelers, four-wheelers, some of them are perched at record levels, right? Although Tata Motors did see a hiccup, of course, due to the margin guidance disappointment for JLR. But would you say that all the good news is already in the price, both in terms of two-wheelers and four-wheelers?
Not really. And I think case by case we will have to approach here, Nandita. You mentioned that they have been best performer in FY24 and even Y2D. But there is a reason behind it, that they were underperformers since last 2 years. If you look at Maruti, Eicher Motors, these stocks have been languishing when market was doing good. Tata Motors has been outlier. Even, other two-wheeler space had not done really well. And now as monthly numbers data suggested since last 1 year or so, these stocks have been doing well. Yes, there might be, margin pressure here and there. But then for me, the market leader in terms of, number of people tracking that stock and how it represents the pulse of our economy is Maruti. And if you remember, a year back and even 6 months back, we were mentioning on your space that how instead of EV, the company has been concentrating on CNG and all models of Maruti were getting CNGized, if I can, term that. And that has led to, volume growth. That has led to margin growth. And Maruti knows the pulse of Indian consumer. And that's what has driven that. And going forward, I believe that the sales from small cars, which has seen tepid growth, that would pick up, and Maruti may continue to, perform from here. You touched upon Tata Motors. Tata Motors has been doing phenomenal, but then going forward, as my analyst says, that there are probabilities of growth tapering, especially in Indian markets, and there could be, a downward take in margins. And that's what, the guidance by management over a period of next 1.5 years, that led to fall in stock. Otherwise, numbers were pretty decent. Overall, auto space could be approached on stock by stock basis. In two-wheeler space, I think Bajaj Auto, which has seen a decent traction, and my analysis says that the growth visibility is much higher in Bajaj Auto compared to Hero MotoCorp. So that is one stock which, your viewers can keep eye on.
All right. Well, that's a view on the auto pack, both the two-wheeler and four-wheeler space. Maruti, of course, one of the premium plays according to Sid, and of course Bajaj Auto has a higher runway for growth. With that, Siddarth, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It's always a pleasure chatting with you, and I look forward to having a longer conversation with you sometime soon.
Thank you so much.
Well, with that, of course, we've come to the end of this edition of Opening Bell. As we leave you, the markets are in fine fettle, although we have tempered a bit from the opening highs. In 22,260 is where we are at. The mid-cap end of the markets is holding fine, 0.5% uptick there. The advanced decline ratio is, at 3:1. So, breadth is also extremely strong. And IT is one pocket that's emerging as the outperformer in today's session. Autos, FMCG under a bit of spot, under a spot of bother. But with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. But you guys stay tuned to Money Control for all your other news and updates.